some basics. My name is Fabian Durango, Durango Insurance and Financial Services. Of course, we are your preferred partner at KW Prestige. We're the in-house insurance broker. We have a desk right close near Adonis' office, right down the street from Adonis's office and next to the printer room. We've been a partner now going on 3 years. Durango Insurance has been in business 17 years. This September will be our 18-year anniversary, so we're very happy about that. Not legal enough to drink, but at least we can vote. So we're very happy about our 18th year anniversary. We have 8 locations throughout the state of Connecticut: Norwalk, Stamford, the KW office in Stamford, Bridgeport, New Haven, West Haven, New Britain. We also have an office in Monroe, in Trumbull. So we're very happy and excited that, you know, our clients have supported us throughout the years. We're one of the largest family-owned and operated insurance agencies in the state. We hold the largest book of business with Progressive auto, home, and commercial. We're very proud of that, and one of the leading companies with household name companies like Liberty Mutual and Nationwide. We represent about 30 major insurance carriers and another 50, 60 secondary markets in the industry. The reason why we're so successful in the business is we have no magic formula. We take care of our clients first. Communication is key. And when there's an adverse situation, we take ownership and turn things around right away. So that allows us to be very successful about what we do. I believe that being accessible, so that's why my cell phone's always handy. My team supports me behind the scenes to make sure that I don't get overwhelmed with work and we can be productive. We are open. Thank God we're able to run our business from home. So myself and 25 of our agents are all working from home, even though our brick and mortars are all closed at the moment. Since day one of the official quarantine mandated by the state, we've been operating behind the scenes. Some of our offices have staff in them, but they're locked to the public, and we're limiting 1 to 2 staff maximum per office. Some of the staff did not want to work from home. Even though working from home is very convenient, can be very challenging. So we're continuing to do business throughout the COVID crisis. We're continuing to support our partners like you. And more than ever, we're working longer hours. So pretty much from the minute I wake up to the moment I go to sleep, pretty much we're on a clock, and that's to serve you, serve our clients. Few things that affected the insurance industry since COVID. A lot of the underwriting guidelines for insurance companies, especially with home inspections, have been waived. Hey, Scott, thanks for joining in. So a lot of the underwriting conditions have been waived, and mainly those have to do with inspections. So insurance companies are not inspecting properties as they used to. If they do, they are doing just an outside, very quick inspection. And they're postponing a lot of cancellations. They're postponing a lot of underwriting requirements, either for 12-month renewal or up to the renewal of the policy, or a 60-day hold on any cancellation. It's very important that you guys know to inform your customers that insurance is part of the forbearance that the state mandated upon financial institutions. So if anybody's going through hardship, they can put their insurance payments on hold at least for 60 days. As we all know, forbearance is not the best thing, especially because you're going to have to make up for those payments 60 days from now. And insurance is paid ahead and it's billed ahead of time. So if you fall back 60 days of insurance premium in order to continue coverage, come July, come August, you're going to actually owe the 2 months that you're behind plus the current month. But if you know any business owner, homeowner, or anyone with an auto policy who's truly in hardship, you can advise them to speak to an insurance professional, speak to me. We can discuss payment options, and or we can discuss putting the policy on forbearance for 60 days. We've done that with very few policies, but it has become very helpful for some of our customers, commercial and residential, to keep coverage active during these hard times and not having to make payments. So that's the biggest update. Of course, on a new homeowners insurance process, it's business as usual. The policy has to be paid up front. All the insurance requirements have to be met and pre-underwritten up front, so the client can go ahead and obtain a mortgage and or go to a closing smoothly. This is mainly all the forbearance, the payment plans, and the some of the underwriting guidelines that are being waived or laxed are primarily for existing policies. We are, however, finding insurance companies more laxed into taking in new business, meaning they're waiving a lot of their underwriting guidelines or flexing them to gain new business. So this is a good time to buy insurance. Just like us, they're saying this is still a good time to buy a house. We are just like the mortgage and real estate industry. The insurance industry has been keeping up with technology. So we are continuing to do business with clients through phone, FaceTime meetings, Zoom meetings, email, doing everything through DocuSign and digitally. So that has allowed us to continue to do business, even though we're not seeing clients face to face. For some of the clients that face technology difficulties, we usually advise them to speak to a family member that can help them with a DocuSign. Or last resort, we are mailing documents and following up the old school way to make sure that everything gets done properly. So we are continuing to do new business and existing business, all digital, whether through our website, email, cell phone, Zoom meetings, DocuSign. We have a lot of conference calls. So nothing has changed on that end of the spectrum. And this is true for commercial and residential policies. I like to cover this a lot because we insure a lot of business clients, and sometimes they think a lot of the options out there for insurance during this tough times are only for residential insurance or personal lines coverages, and they're not. This extends to commercial risks as well. Homeowners insurance, as you guys all know, you all experienced, you guys heard my my coverage spiel before. You know, the homeowners insurance policy is designed to cover the client, cover the asset. So when we insure a home, we insure a home to its full replacement value. We make sure all the contents inside the house is covered properly. We make sure that the customer's living expenses are covered if they were to be living outside the house for any reason, especially a reason that we will pay out a claim for. So if a client's outside the house due to a claim, we will pay for all their living expenses outside the house. We are also covering the client against any lawsuit. God forbid someone trips and falls, leaves their house intoxicated, a tree falls on the neighbor's yard, and this causes a legal dispute or having the insurance company to cover a loss on behalf of the customer. We will make sure that we protect it. On every single landlord or multifamily house, we always add rental, loss of rental income. And I want to touch on that a little bit, especially during COVID-19. This is very important for me to cover. All insurance policies for whether they're owner-occupied and they have multiple units or it's a landlord policy, do cover loss of rental income, but that's only in the event of a covered loss, and it's usually a sudden loss. So fire, theft, vandalism, wind and hail, lightning, a tree falls on top of the house, a cover liability claim. These are all reasons where an insurance company will reimburse the landlord or the homeowner for loss of rental income. Unfortunately, loss of rental income due to COVID, quarantine, or the new laws that the governor has put into place, where it's allowing tenants not to pay their rent under hardship situations, is not covered by insurance. I wish it was. I know a lot of landlords are suffering. Actually, I was able to jump in on a call, a Zoom call right at one, because I was speaking to my second investor in regards to having landlord-tenant issues and income issues, but unfortunately, this is not covered. Just like 9/11, this is uncharted territory for everybody. The insurance industry is usually the last to adjust to changes. Usually, the lawmakers, financial institutions like banks, And then we're usually last in line after everything's in place to adjust. So unfortunately, as of now, no property, homeowners, or commercial insurance has paid loss of income due to COVID, whether it's loss of rental income or loss of income to a business. There has been a lot of fraudulent, I've seen on Facebook, a lot of fraudulent advertisement about sign up, join us in a class action lawsuit to be able to qualify you for loss of business income or rental income. I've actually joined a couple just to see what's going on. I didn't give them my real name or email, and it was all spam, all people trying to obtain your information. If insurance companies were to be forced to pay loss of rental income, that will come from the state, the insurance commissioner, and a valid lawsuit that may be filed into the courts. As we all know, most states, the courts are closed, so nothing's really happening. I am advising clients if they plan to take legal action, just to do it wisely, so they're not being taken advantage of, okay? Very important subject to touch, as many of us own multiple properties and or work with investors and or sometimes deal on you guys may be leasing some commercial space to a tenant. Flood insurance is business as usual. We cover both the private market, which tends to be lower for about 90% of the flood risks in the market. You just have to make sure your mortgage company does take the private market product. And then we also offer FEMA. We have 3 wholesale agencies, the most in the state, to be able to shop these policies. So we usually tend to not only be the lowest, but the quickest and the most effective with flood insurance. We tend to call ourselves a flood insurance specialist, and that gives us a lot of leverage to turn around policies quickly, lower premiums, and a little bit more options for the customers. Condo and renters insurance fall under the same stipulations of a homeowner's policy in regards to coverage. The biggest difference between a tenant or condo policy is that we don't insure the structure. Renters or condo policies that we don't insure the structure. Everything else is gain. If you're representing a landlord, you always want to advise the landlord to enforce having the tenant get renters insurance. And you always want to advise the landlord to request liability limits above the market value or loan value of the house. So if you're renting a house in Norwalk that's worth $450,000, you want to advise the landlord to at least request liability limits for the tenant of $500,000. So if there's a lawsuit and the tenant and the landlord needs to sue the tenant or subrogate against the tenant's renter's insurance, they have enough to cover the lawsuit and protect the landlord from possibly putting his assets at risk. Again, all the scenarios that put the landlord at risk of being sued are the same. The tenant can cause those same situations or scenarios for the landlord. If the tenant doesn't have renter's insurance, unfortunately, even though if it's the tenant's fault or liability, since they have nothing to go after or no renter's insurance, now the landlord has to pick that up. If they have a minimum renter's policy, which only covers $100,000 in liability, and you have an exposure of $300,000, $400,000, $500,000, they're going to go after the tenant's renter's insurance for $100,000, but then go against the landlord anyways. So pretty much in Lower Fairfield County, you always want to advise the tenants to get $500,000 liability on the renter's policy. If it's a higher end home in Greenwich, Westport, etc., you may request $1 million. Now, this sounds like a lot of coverage. It may sound like a lot of money. The biggest difference I've seen on a renter's policy between $100,000 and $500,000 is about $50. So you're not asking the tenant for anything extraordinary or to come out largely out of pocket to comply with a simple insurance requirement that covers the landlord. Yes, there are insurance companies that have a limit on exposure. A lot of the online carriers, a lot of the insurance companies that allow clients to buy insurance with 2 clicks only limit tenants to get $100,000 or $300,000 worth of coverage, but that's because they know they're taking on a lot of risk and not properly assessing their customers, and they decline a lot of claims as well. The carriers that do cover claims and do a lot of, not a lot, but they do some pre-underwriting work, are going to allow the client to get $300,000, $500,000, even $1 million liability, which sometimes for renters insurance seems hard to get because your name brand companies don't do it. It's not hard and it's not expensive. On average, I insure a renter's policy for about $500,000. Nowadays, they're going for $180,000, $190,000. A standard renter's policy for $300,000 goes for $160. And the reason why I like to touch on this, a lot of tenants get scared and walk away from a deal when they require renter's insurance. And that's simply because they don't know the mechanics of it. They think the landlord's taking advantage of them. They think, oh, the landlord should have their own insurance. I don't know why they're asking me for this. So it's good to educate them. It's beneficial for the tenant. It's beneficial for the landlord. It's pretty much standard. It's included in a lease. In the state of Connecticut, there is a clause in there for renters insurance. And for less than $200, they should be able to meet the requirement. That's $200 a year. For a lot of you guys that do rent commercial listings, we're doing tons of small business insurance still. We're surprised of how many new ventures are opening during this pandemic, or people going into new business practices. One of the business policies that, of course, you guys are aware of based on the lunch and learns that I've done and the emails that I've blasted is professional liability. And professional liability for realtors right now more than ever is very important to have as you're doing business digitally, as you're doing business without having a conversation with the client face to face. And just to touch on the basics, your E&O coverage only protects you on the contractual piece of a transaction, limits you exclusively only to the contractual piece. Now, that's a big part. We all know that's a big part, especially with all the DocuSigns, the dot loops, the MLS requirements. Your broker is providing that for you at a very low cost. That's already included in your cost of doing business or part of your closing expenses. However, everything else that you're exposed for, if you do not have a standalone professional liability policy, you could be in big trouble. And we all know most of the high producers, or a lot of the new agents go digitally. They advertise a lot on the internet. They do everything through email or text. So I know open houses are not right now the case, but when we go back to doing business, back to normality, which we don't know what that is yet, and you start doing open houses, co-hosting an open house, or going ahead and filling in for a fellow coworker's open house. If someone trips and falls during that open house and you don't have professional liability, you could be personally liable for damages to the property or any lawsuit an attendee of the open house puts against you, or the owner of the property puts against you. Okay? If something comes up missing, we have had liability claims with high valuables have come up missing after an open house. And unfortunately, the homeowner goes ahead and sues everybody. This goes to court, and it's always the realtor hosting the open house or listing the house that share or take all responsibility and liability. Also had multiple situations where doors have been left open and or thermostats were touched, turned off and on, maybe during an inspection or an open house, and now the house suffers a loss. The homeowner states that they left the thermostat at 65, they did not turn it off, it becomes a dispute. The property undergoes damages due to freezing pipes, and now you have a $200,000 claim against you. Their insurance pays, and now this insurance is subrogating against you as the listing agent or the last showing agent or the open house agent. Professional liability will cover all these matters, and it will cover you at a minimum of $1 million. So a lot of people say, hey, I don't want to incur another expense. And I get it. As realtors, everybody's going after your pocket. Zillow, marketing agencies, when you have a closing, there's a lot of expenses. But, if real estate's not a hobby, this is a policy you must have. I don't want to force it on you. Just plan it for the future. The second part that's very important, this translates to how we've done business in the past 5 years. I know we can go back more, but we truly have gone fully digital in the past 5 years, is covering your cyber liability exposure. And this covers many aspects. The most, I'm going to cover the most obvious is social media advertising, virtual open houses, any artwork that you put out through a blast email, through social media, on your website, on your LinkedIn page, that may be offensive, that may contradict facts, that may hurt somebody, offend somebody, now falls into cyber liability, and it's called cyber advertisement. Insurance companies are very smart into not generalizing social media websites as general advertisement. That has been covered under your standard liability policy if you have it, only if it's in print. We all know that print advertisement, all that stuff's almost gone. So everything's digital, especially now with COVID. So if you misrepresent information on a property, and someone wants to sue you over it, where there's the homeowner, the public, saying that they made a financial decision, or they just want to go ahead and go after you for false advertisement. If you don't have cyber liability, you're going to come out of pocket for the fence. Remember, the fence is the number one cost of insurance companies, not settlement. So first you're going to come out of pocket to legally defend yourself if you do get a lawsuit, a serving, or a letter from an attorney. And then if you are found at fault, or you just want to settle to move on with your life, this is something you're going to come out of pocket for. And cyber liability will pick it up. Cyber liability works in increments of coverage because it is an optional coverage. I always include 100,000 in the quotes, but then you can always increase the coverage up to $1 million, $2 million, $3 million. I have had some of the fellow KW agents over at Prestige take even $1 million or $2 million umbrella on cyber liability, because they do a lot of, virtual tours. They do a lot of online posting, social media posting. They're doing everything digital, especially in the high-end market, and they don't want to expose themselves. We all know that high-end customers are the best, but they tend to be the ones to also sue you if anything goes wrong right away. So you just want to be conscious of that, know your market, consult with me, and we can discuss what's the proper cyber liability coverage for you. So that's the advertisement part of cyber liability that we build into your professional liability quote. The second, it's going to be if data breach. That's the legal term, data breach. And in simple terms, that is if someone gets a hold of your cell phone data, you lose your cell phone, they're able to break in, you lose your laptop, a hacker goes into your laptop, steals your data and your client data. The minute that happens, you have to follow federal guidelines to notify everyone in your database publicly, and to offer reimbursements of financial loss, and offer them to go on a credit monitoring program mandated by the government to make sure not only that now their information hasn't been exposed, but it won't be exposed in the future due to the fact of your laptop, your phone being compromised and their information being in it. So that's the most crucial part that can take a business down, where if your laptop, your phone, your electronic data is compromised, your client's data is, if you don't notify them, now you're in legal trouble. If you do notify them or someone else finds out, because people do backtrack how their information was taken improperly, and they can track it back to you. I had a few scenarios like that where people didn't know that they were hacked, that their client's information was put at risk, but the clients eventually did a cyber investigation. They were able to track where their information was taken from, And if that individual that was the source of the problem did not take proper action now, they're going to get sued, they're going to get fined, and they're still going to have to comply with all the protocols from the federal government to notify their clients and offer remediation for their losses and monitoring of their financials. So it sounds like this will never happen to me, but all it takes is someone who is, technology savvy or hacker to want to get into your database and cause troubles to make this happen. Companies as big as Equifax have been affected by this, and mom and pop shops too. We've seen a lot of mom and pop shops affected in big cities like New York, Chicago, Miami, but definitely the West Coast, having so many computer programmers and tech companies out there. Unfortunately, you get bad apples that target a lot of small businesses for credit card data and things of that nature, just clients' personal information. We will cover that aspect if you have the professional liability. And then the other part is financial loss. So I had a client, a realtor, who was trading check information back and forth with another person. That other person was intervened by a hacker from Indonesia, was able to tap into the email, get a copy of the check, get more personal data from the client, and withdrew $6,300 from their account in the blink of an eye. So all the realtor was doing, it's getting a signed contract, a check along with that contract, submitted it to a bank or someone else. That person then forwarded it to an attorney or someone else. A hacker intervened, took the information, withdrew $6,300 within that email interaction. They did backtrack it. It took a while. They was just not able to take the money, and the server and the IP address and all of that was properly masked, so they never got the person. Unfortunately, everybody involved in that transaction had to reimburse the client the $6,300. The realtor has cyber liability, but decided to pay out of pocket, and they all paid above the $6,300, had to pay all the remediation and credit monitoring for the client. It was a one-time situation, so it kind of stopped there, but this is a perfect scenario where, you can be hacked, someone else can be hacked, and they can take your information, and you may have to come out of pocket. Same thing happened to a travel advisor that I insured. $16,000 were intercepted to pay for a group travel. They were organizing a group travel. They were doing some type of wiring of money instructions on how to get paid between vendors. Someone intercepted, took the $16,000, and the travel advisor cyber liability paid their portion. The other party didn't have cyber liability, so they're going through the courts for that at the moment. So this is real. These things do happen to professionals, and this is what your professional liability policy covers. You can also add, if you have equipment, which most realtors, unless they're a big team, you don't need to add equipment, but if you have a lot of computer equipment, 3D cameras, and things that you use now, especially for virtual showings, you can add that coverage onto your policy. Now, don't get scared. This policy is not $1,000, $100 a month. You can start off with a well put together policy for about $300 a year. You can decide. We have been able to work with the Hartford that came up with a good about $300. Everybody has a different insurance rate, but it's an average of $300 a year. We're able to build $1 million standard professional liability, $100,000 cyber liability, and $100,000 cyber advertisement and advertisement injury overall. So that's pretty good to start with if you have nothing. It's about $30 a month. You're protected. You can sleep good at night, especially now that everything's converted to digital, to Zoom, and you're exposed more now than ever. We built plans for some of the agents in your office with umbrella policies, $1 million cyber, $1 million advertisement injuries, and those policies have climbed to about 500. So actually adding 10 times coverage adding an umbrella policy and adding more perks is not going to skyrocket your policy. The most expensive one I sold, which was a really good package, was for like $700. That included $3 million umbrella and a lot of increase of coverage. So your basic good structured policies about 300, and you can add options for another 200-300 depending how you wish to put it together. Kind of covered the basics, you know. I know this is a Zoom meeting. We haven't had a lunch and learn. I haven't been able to bring my tasty food over there, but just wanted to catch everyone up. I don't know if there's any questions. Carlos, how are you, bud? I don't know if anyone has any questions. I know this is being recorded, so I wanted to know if anyone's have any questions or anything they want me to cover or anything I left out.
No, I don't know if we have any questions. It's kind of scary when you listen to all of it, you know, because then you're like, wait a minute, oh my gosh, I want to retract all of my ads. So, but you said you have something like ready to go. I'm not in production, obviously. So, but I still advertise and I still go out there and I still get my name out there. So it's something to consider because I never had considered that, but you're absolutely right.
Yeah, as you're out there, you know, unless you're, you know, completely, when it comes to the advertisement and digital part, unless you're completely old school, which there's no option for that right now, unless you're willing to take a long break, because you can't see clients face to face. You need the advertisement. Injuries really, it's one of the things that we're paying out the most. Especially in high-tech cities, in big cities, that's where you get a lot of exposure, a lot. But that's going to be the norm. I speculate in anywhere between 10 to 20 years, site reliability kind of being just part of everyday life for everybody. Like kind of like auto insurance, it's kind of just going to be the norms. Either going to be somewhere or another built into your home insurance, your auto insurance, your cell phone, one way or another, because these are the traditional lawsuits are going to start fading away. You're going to start seeing more of digital related lawsuits.
And that policy that you were talking about, that covers me as a person, or that only covers my business?
Both. As a realtor, we're going to cover both because it's a professional liability. So we cover both the person or persons and the business.
Now, let's say that you do an ad for something else. I don't know. That's why I mean, like
it has to be related to the business class that we're rating you for. So, you know, there could be a lot of gray areas, but to be more direct, anything that's real estate related and it goes with your realtor position that we're rating on a policy, we will cover. I know you have a different position within the entity, so I will just call my underwriter and say, hey, listen, I want to offer this policy to this person, but their job's a little different than your standard realtors. They're a different rating. Can we cover her under the same rating? And then we take it from there. I always call my underwriters just like a loan officer would when you have a scenario that's a little bit outside the box. So I can definitely look into you, make sure it makes sense, and we'll speak off record and follow up.
Yeah, got it. All right, cool. Thank you. And I agree with Silva. I wish more people were on this call because it's so like you listen to it and you're like, oh my gosh, I don't want to do anything.
What I'm gonna do is I'm gonna talk to Adonis if any way I can keep this recording, and then I'm gonna blast all the KW agents with the recording, and then put some of the professional liability stuff I put out there. It's kind of my fault too. I will take some responsibility, and I like to advertise my lunch and learns on my own. I do see that people, you know, kind of react to it, and I didn't have a chance this time, but we're going to do another one. I'll stay on schedule, and I'll be, you know, I'll touch on the same subjects, and if we have more people, obviously questions are good to cover a few things that.
Yeah, people need to understand that you're sharing very valuable information. I mean, I wouldn't even think of all of it if you hadn't mentioned it, as a matter of fact.
Thank you, Sil.
Yep.
Thank you. I'll stay on schedule and I'll keep sharing. I can't wait till I go back to that conference room. All right, guys. Well, I really want to thank you for your time. My cell phone, as you know, is always available. For those that will be hearing the recording, it's 203-667-9953. Our website has a quick home link, quote link. You can always click on the home link, fill out some information, send it to us with instructions, and we can contact your customer. It's a very simple form. It just allows you guys or a customer that's on the run to fill out this information, gets over to my home team, and then we follow up. We use technology as a means of ease of doing business. However, the personal touch is always there. Sometimes we play a lot of phone tag with customers because they're super busy. I email them or text them the link, and I let them know, please fill this out. I will then get this information, start working on a quote, and then we can take the conversation from there, and they love it. So this is just an option for clients on the go that like ease of doing business. It's just a quick form, name, address, phone number, email, few questions about the property, of course. If they don't want to fill something out, they can still press submit, send it over to me, and then I can have a one-on-one with them.
Yeah, and I would like to attest very quickly for your services, because every time when I call you or text you, actually, you give the impression that you literally drop everything that you're doing and you respond back to me and to my clients, which is awesome.
It's not impression. I do it, and the communication's all me, and then I have to thank my team for getting the work done behind the scenes, because I'm not an octopus, but definitely, Silva, you call me, you text me, I'm there. Thank you. I appreciate it.
Thank you so much. We appreciate the time.
Scott. Thank you, Carlos. Thank you, everyone, for tuning in. If you have any questions, don't hesitate to call me, text me, or email me, guys.
Yeah, hey, Fabian, if there's something you want to have sent out to everybody, send it to me, and I'll blast it out to everybody.
I'm sorry, you cut off. What, Steve? I couldn't hear you.
If there's something you want to have sent out, because we didn't have great attendance, if you have something you want to send out to everybody, send it to me, and I'll blast it out to everybody.
I appreciate it. So what I would like to do, I'll talk to Adonis on how we can get this recorded. I'll send it over to you with also like the body of the email that I have sent before in regards to the professional liability. And if you could send it out, that'll be great.
Yep.
That'll be awesome.
Cool. Yeah, we'll do.
And then you could put, hey, please listen to the professional liability, especially the professional liability portion of the lunch and learn. So that way, if they don't want to hear anything about home or COVID, they can go straight to the point about what matters to them.
Okay.
All right.
Cool.
Thanks, Steve. Hope everyone at home is doing well. Say hi to Rick for me and everybody.
Definitely, man. Take care.
All right. Take care, guys. Pleasure seeing you guys. God bless.
Thank you. Have a great day. Bye-bye.
Take care. All right.
Good job, Fabian.
Thank you. I appreciate it. Adonis, you don't mind sending the video over to Rick, and then I'll forward you the body of the email that I sent to Steve. I apologize to Steve. And then send it in with the body of the explanation of the coverages and stuff. That way they can look at it. We actually, believe it or not, today we spoke to two of your realtors, and we were discussing other lines of insurance, and they ended up buying the cyber liability. So those who are still blessed to be in business during these tough times are definitely seeing the value. So I'll send you everything. Hopefully you can send it over to Steve, if you don't mind.
Yeah, send it over to me, and we should be able to get that as soon as we can. Yep.
You're the best. Thanks, brother.
Thank you, sir.
Take care. Have a good one.
All right, you too.
Take care.